Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the commitment of traders, so the order flow, and we will be looking at the data from the non-commercials. Now, these are the biggest speculators in the market, so hedge funds. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what do we have? Now here on the monthly, we can see how at the moment the market is breaking above a quite strong historical structure area. In fact, this zone was acting as previous support here, again here, again here. The market then broke below the area, and at that point, that previous support became resistance. The market did create a first red candle rejecting that zone. However, at the moment the market is breaking above that zone, and if that will be successful, like it currently seems, more bullish price action could be expected away from this area. Now, if we drop that on the weekly time frame, what do we see? Now, from a weekly perspective, we have another very important thing to keep in mind. The market was clearly bounded in this range. We had the top of the range here acting as resistance, which was resistance here and again resistance here, and a bottom of the range, which is here, which was acting as previous support here and again support here. Now, at the moment, the market is breaking above the zone, meaning that all this previous resistance is about to be turned support here. If that will be the case, at that point, we could expect a retest of that previous resistance turned support and then a potential rejection to the upside, meaning that we could expect some short-term bearish price action and then longer-term bullish continuation. Now, dropping down on the daily, what do we see? From a daily perspective, we can notice a very strong impulse to the upside, which has just happened. Now, in general, after an impulse, what you would expect is first a correction and then more bullish continuation for the completion of an impulse correction and impulse pattern to the upside. So in a situation like this, what we could expect is a potential correction to this previous resistance turn support, and then from here we could expect a potential rejection to the upside for the completion of an impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, what we can see is that with the last reports in the long term, we had a big increase of the net positioning. In fact, we went from having minus 68k net positions with way more shorts than longs to now having minus 20k net positions. So essentially, net positions got tripled to the bullish side. So we can see how a huge amount of shorts were closed from an institutional perspective, and now that the market is exiting from the weekly range as we have previously identified, we could expect some longs to be added also from an institutional perspective, especially because the market is also breaking above that monthly structure resistance area as we have identified at the beginning of the video. So if we do get a retest of this area, it's important to keep in mind that this is not only the previous resistance turn support on the daily, it is also on the weekly. And if we take our Fibonacci from the low to the high of this impulse, we can see how we have precisely the 0.32 and 50% Fibonacci retracements lining up perfectly with the previous resistance turn support, creating confluence of support at this area, which we could expect the market to potentially reject to the upside. So if the market does retrace to this zone, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.